Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from the SALT Conference in New York City. Joining me for this segment with Mekala Krishnan, partner with the McKinsey Global Institute at McKinsey Company. We're here to discuss the energy transition and where we stand with it at the moment. Mekala, it's great to have you with us. Welcome to TradeTalks.
Wonderful to be here.
And of course, everyone's talking about the energy transition at SALT and otherwise. Where are we at this moment in time?
So the reality is there's a lot of meaningful momentum. We've seen many technologies come to scale. We've seen capital really start to flow. But the fact of the matter is we're not as far as we need to be. We've looked at 25 different scenarios from the IPCC, from McKinsey, from the IEA, that have looked at what is our current trajectory of emissions and how does that stack up relative to the Paris Agreement. The Paris Agreement said limiting warming to well below 2°C, ideally 1.5 degrees C, reaching net zero by 2050. By our analysis, we wouldn't even reach net zero by the end of the century, and we're more like 2.5 to 3.5 degrees Celsius across these scenarios. So a substantial change that we need relative to our current trajectory.
Do you think part of the challenge is it's not a one-size-fits-all solution? It's not one particular type of energy that's going to be, electricity as an example, it's going to be, the miracle that fixes all of our renewable energy challenges, or perhaps it's a portfolio of energies?
Yeah, so I think part of the problem is that there is no silver bullet.
Right.
We need a whole range of energy supply technologies. We need renewable power, we need nuclear energy, we need also things like hydrogen or biofuels. We also need to change energy supply sectors. So we need to change how we drive. We need to change how industrial emissions are managed. So it's both the transformation on the energy supply side and the energy demand side. And of course, that takes a lot of dollars.
It does. So what does this mean for investors?
Yeah, so one of the things we looked at was how much do we need to spend on the transition. Today, if we look at those energy supply sectors, those energy demand sectors, also things like agriculture, we're spending about $5.7 trillion globally on these energy systems of today. That's both high emissions energy sources like coal or gas power. It's also some low emissions technologies like renewable power that are starting to enter the mix. Going forward though, if we are to get to net zero by 2050, that $5.7 trillion needs to become $9.2 trillion. It's a step up of $3.5 trillion. Now one way to look at that is that's enormous opportunities for investors. That's trillions and trillions that we need to spend. The challenge is we need to spend on different technologies. We need to spend on things that we don't yet spend on today, and that comes with different forms of risks, different return profiles. About 20% of 20 to 25% of what we spend on today, that 5.7 trillion today, is on low emissions technologies. Going forward, that number needs to be more like 75%. So it's a massive reallocation of capital. And so that's an opportunity for investors, but it's also a challenge that needs to be managed.
Well, how are you going to get the capital to flow to those areas?
Exactly, that is fundamentally the question, because again, as I said, they have different risk profiles, different return profiles. And so I start with, I think the most fundamental thing we need, which is not the responsibility of the financial community alone, is innovation. We need to make low emissions technologies actually cost competitive, actually viable, actually make sense for consumers. By far, that's the biggest thing that we need. But other than that, there are various things that the financial sector needs to do. We need to build capabilities to evaluate these technologies. These are new technologies that we may not have yet visibility into. They come with uncertainty, so the financial system actually needs to build an understanding of this entire set of new technologies. We need different forms of capital. So this is not just about project finance, lending to build a renewable project in a country, but it's actually about new forms of VC funds, new infrastructure funds. It's also philanthropic capital and public capital that needs to come together to de-risk some of these investments and make them viable for private capital. By some of our assessments, if you think about all the spending we need, even in the next 10 years, about half of that can come from private capital, and about 40 to 50% of that needs to be unlocked in some way by public capital.
Right, but what about the governance around that, right? I think this challenge is, especially when you hear about public money, where is this going? Is it going to the issue that it's intended to go to? And I also feel, whether it's investors or consumers, when you hear that word mandate, you have to have this by 2030, 2040. If it's not scalable and the infrastructure isn't built, you can make all the cars you want.
Absolutely. So this is why I think the innovation is the number one thing, because the moment it starts to become affordable for a consumer, the moment buying that electric vehicle is cost competitive relative to my traditional car, the moment industrial technologies and investing in decarbonizing steel or cement is less expensive than it is today, capital will start to flow. So I think number one, we need to solve the affordability challenge. I think then in addition to that, we need better ways, better governance, as you said, around it. We need better standards to measure emissions. We need better disclosures and ways of actually reporting on where emissions reduction has taken place, and better accountability. we're starting to see some of that. There are various kinds of standards that companies are starting to adopt to report on their emissions. But remember, this is an entire transformation. It's an entire reallocation of capital, an entire transformation about how our economy works today. And that will require new ways of working and new standards and new forms of governance.
All right, appreciate the insight. Mekala, thank you so much for joining us on Trade Talks. And thanks for joining me from SALT. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.